So again, thank you for joining us today on this special presentation on what I call the price pressure bands. And this is a relatively new indicator that was part of an educational package that I had, and the response has been so good, people want to know about it. So I finally have released these now. They are available as an individual indicator for $195 only, keeping with my policy of having low cost indicators to help traders. That's all I care about, helping the traders get a good deal and make some money. And that's my reputation of 18 years in the industry is based on that, and traders know I care about them. And so we're sticking with that. Wait till you see the price pressure bands in action here. I'm going to show you on these charts here on this plane chart to start. But I think you'll really like them. And if you are interested in getting the price pressure bands, you can just go to the blog at boomerangtrader.com where you logged in and with your email there, and go to boomerangtrader.com and under the blog section for today, and then I'll put it up on the archived section or the resource section tomorrow, and they'll have the link there, and I'll send out some other announcements so you'll be able to get it if you're interested. But take a look at this, what the price pressure bands are. This would be just a brief tutorial, about 15 minutes or so. It's all I need to show you this because it's very simple. Now some people may say, oh, it looks like Bollinger Bands or something. Well, it isn't. It does resemble the bands like a Bollinger Band or Keltner's and all that. But what I've done is design these very specific bands, and that's the key right there. Me personally designing it after years of trading with it, retooling, retesting in live market action. That's the secret right there. Anybody can put out a fancy looking indicator, but do they trade with it? Do they make money with it? Do they know how to use it? Can they show you what they've spent years designing it, the nuances of it? That's the secret. So that's what we offer you here. So with that in mind, let's get, for example, I got this chart here. Let's start off on the opening on this day. I don't know where we are, I don't know the date, but this is a West Coast chart, so it's showing you this is around the opening time here. And this is a plane chart, so I just want you to focus on these price pressure bands. Now, the price pressure bands consist of a thinner dashed blackish line. I made them black so they're easy to read, and a a thick, solid black line. That's all I've got up here, a thin one and a solid one, so that you can see exactly how this works. Now, what happens with the price pressure bands, and then I've drawn a simple moving average running through the bands just to give you an idea that when prices move above the orange line and the price pressure bands open up, you'll be able to see what happened to the prices. You see what I mean? That's how I can teach you how this works. So just to give you an example, so when the price pressure bands open on one side, that means the thin dashed line here crosses up over the thicker line. You know what I'm going to do right now real quick? Give me just a quick second while I thicken these up. Now you can see it right here. I'll actually show you right here. Here's the price pressure bands, and I'm just going to go in real quick here, and I'm just going to add a little thickness to all of these just to make sure you can see them just right. So this is actually part of the tutorial. I get to show you how to go into the indicator and how you can change these colors, whatever you want. That's always available on NinjaTrader with their excellent system. I designed my indicators on Ninja because it's just such a great service, and we really respect those guys over there. See what I did there? There goes. I like that. That looks better. Nice and thick. So now you can really see the price pressure bands. Glad I did that. So the simple way of reading this for right now, for our tutorial, which like I said will only be about another 10 minutes or so. So there's not much, but what you'll see when you start trading one, that's where you'll start getting a real feeling for this. Price is above the orange line, price pressure bands open, and look where the prices run. They run right up into here from opening of around, for example, this is the mini NASDAQ here, which I'm using for the example here, and I'll show you a boomerang chart in a minute as well. This is just a plain 450 tick chart, which we tend to use 450 ticks for default. I mean, you can use a 2-minute chart or whatever you want, but we use 450 ticks for Boomerang, so I'm showing it to you on this chart here. But look at that price, 68.62 on the top of this candle or in the middle, whichever you want to call it, doesn't really matter. When the price pressure bands opened up on this candle, I'm just trying to give you a price come here, 62 quarter. And when the price pressure bands closed right here, and there was a little bit of a continued reaction on the upside, but look, they closed at 70. So there was an 8-point move that was signaled at the probably the worst entry here at the top of this candle you could have got in, and you got an 8-point move just following the price pressure bands. You see that? So they backed off here a little, and the price kept going up because it was a opening here, first half an hour, 45 minutes of trading, and they're trying to jam the upside. That's great. And they reopened up here again. And I'm going to show you, I'm just take you through this, then I'll show you the significance of the changes. Now, by the way, as they were moving up, notice on the downside, which is always a secondary thing to watch, the downside, the opposite side of the price pressure bands were opened all the way up to this candle. But they closed up here first because the front running ones are going to front run the secondary ones, and that's very valuable information. So they did pop back up above this line and then kind of floundered, and then look at here. They launched another upside move, and the price pressure bands crossed over here again, and prices shot up from 82 all the way up to 86 again for another pop to the upside here. Now notice after this extended move, when the price pressure bands crossed over and everything went flat and they turned on the downside here, everything stalled on the upside and started getting a little choppy. But this gives you a hint if you're an astute trader using these. Now this is not a recommended Boomerang day trader method or anything, but I'm just showing you what you can do. You can work with these and develop your own methods because they're so accurate. The top is ending here and they're opening on the downside. Now everything's still a little flat, but if you're kind of astute, you can look to short into this configuration. Price pressure opened on the downside, topping in, and price pressure confirmed with the same downside on the downside with the cross under of the top. You see what I mean? So you just want to think short bounces, and sure enough, that was quite effective. Then they go choppy. You know, you can see everything's very flat here. If you put your cursor up like in the center of the price pressure bands, you see how flat everything is. And up here too, it's sloping down a little more. It's still leaning more on the sell side. But here, for example, when they start crossing back up over the orange line, notice the price pressure bands opened right here when this candle leaped up. So if you took the crossover on the upside, and when I show you on Boomerang, you'll see how the bias will be much clearer because you have the Boomerang features. But notice how they open up here on this candle, right in this area, and they stayed open all the way up to this candle. That was a move of 84. I just use the last four digits, 84 even, all the way up to 99 quarter. 15-point move there that the price pressure bands helped you identify. And then they cross under as things change because it's going to get a little choppier. But notice they're still open on this side, and they just smidgen crossed a smidgen here, but stayed open on the upside. But as the upside here started faltering a little, these are hints of what to do with the market. This is a market reading tool. It's not necessarily a signal. The signals come on Boomerang, or you can use other methods for entries or whatever, but I'm just showing you how this helps you read the market very clearly. So now they're flat again. You put your cursor up into the price pressure bands here and here. They've crossed over to the downside, and they've crossed over the downside. Here they crossed under, here they crossed under. So that tells you most likely you can try to trade pops if you get astute, but you got to be very fast. And don't, by the way, as a little side, since we just started this crash recently, be very careful trading because it's things are going pretty wild here, but it'll smooth out soon. Don't worry. So now mainly what we're watching for in a trend type move, a micro trend move within the day trading time frame, is a move to go down and tap the solid band and open up the price pressure bands, and ideally getting them sloping that way. And you can see on this first candle that's what they did. The orange line here is sloping down to this moving average in the center. The price pressure bands have opened on this candle. There's a little spring back, which markets tend to do. It's like a boomerang effect. You throw it one way and it comes back the other way. Hence the name of Boomerang Day Trader. And now look, with the price pressure bands open, look at the tremendous pressure on that price to cave in. You see that? Very, very valuable. Now look what happened here. Right here, they closed. But you can see them squishing together right in here. But they closed here. So arguably, when you're day trading anyway, you're just going in there and try to get the general, uh, what I call the easy money, or the generally the fastest and easiest money you can when you're a day trader. That's my core philosophy, at least, and I know a lot of other day traders are too. You're not going to worry about a big trend move. That's a different type of system. But look at that. Right when they opened, if you got them short here at around 97, and they came all the way down to uh, 91, 6 point move there. So now prices are back above the orange line. Price pressure bands are opening, but they're kind of flat. So you're gonna see them opening up down here. So that means support. See how easy that helps you to read the market. Support. And now they're moving up here, but it's not exactly a trend move yet because everything's still a little flat. So now this opens up here, sloping up. The price pressure bands open up. Now you can see they're going to start trending up a little. And 05 ran all the way up to 15 for a 10-point move, and that was identified by the price pressure bands opening up here with the prices stabilizing above the orange line. You see that? They closed up right here, called for a choppy market, but notice how the bottom price pressure band stayed open. So that's another tool you can use to stay in a trade if it's on the same side, in this case of the orange line, kind of a trendish type move. Same thing here. The price pressure bands open up as they start to ascend higher again. And they caught support here and ramped them up again. And a lot of times this is coming into the close, so they're going to do whatever. Let me show you one more chart, and then I'll go over to the boomerang chart. Well, scrolling back here, even on Globex, you can see price pressure bands open here. Up they go. Let me show you a lot of examples. They're opening here, confirming here, and up they go. Holding open here and closing up right here, just right up near the top here. See that? Of the move. From here all the way up to here before they close. Crossing under here. See that? Prices coming down all the way down into this deep part here where they close right here. It's not there necessarily to pick off a bottom, although sometimes the price pressure bands will actually pick off a bottom. The main idea is to give you guidance for Boomerang, which I'll show you in a minute, and to guide you into this trade and being able to catch more points from just seeing that the price pressure bands are still open. It's a very valuable tool when you watch the market. If you're in a trade and they close, generally you better watch out because you might get some whipsaw on the other side. But we're just trying to capture that main chunk of the profit there. So here you can see the whipsaw coming in. They're still on the upside, but look how flat that is here. So now they open up again, pull back a little bit off that first opening candle, and sticking with them, the price pressure bands yank those prices up. Like if you take the candle opening here, or the price pressure bands opening here from this candle, and a pullback to the center of this candle, say for example 58 ran all the way up to 66. You see that? It's a scalper's dream come true, the price pressure bands. Same thing, tap the solid line, price pressure bands open, you get in, A lot of the moves are very quick. And sometimes it's just kind of a choppy climb higher in this case, and the price pressure bands are mixed. There's no indicator that's the answer to everything, but boy, when you're getting in these trades and you need extra guidance as to what the market buys, because if you take the price pressure bands away and say you just have this orange line here, you say, well, gee, prices above the orange line tend to hold. Well, that doesn't tell you that much, except it's a nice indication. And below them, they tend to move lower. But if you got the price pressure bands, you can see that it adds a whole new dimension to that market. And it'll tell you when to get in to a trade when they open up officially and start really moving into the putting pressure on that up or down side. And again, especially if you're a scalper, the idea is even in a real whipsaw market, they open up, you pull them back into the candle, and up they go. So let me show you some more examples here. Look at this. It's classic. We're following the one on the side where the prices cross over the orange line. Price pressure bands opened actually on this candle. So if you pull them back halfway into the second candle or somewhere in the candle that opened next, you can see how they ran up. And right here, here's an example where the price pressure bands actually called a top. They closed right here, right? And the market reversed. When it reversed, what happened? The price pressure bands crossed under. We talked about that earlier, but then you just wait for them on this side. That's when the pressure starts in the downside. In a fast, furious market, all the way down here, right to where right as they're bottoming in here, you see them coming into a close just before they leaped higher and then went into whipsaw. Same thing though, as they jumped higher right here, price pressure bands opened up, pull back into this congestion area, up they go. You see how valuable that is? So again, that's an example on a plain chart how these price pressure bands can give you some really excellent market reading ability, especially when you're trading these momentum blasts. I designed these for Boomerang and they give you a momentum blast effect. You're going to know when the market's going to stall, probably turn around, but you're waiting for those blasts on the up or down side, and that's the price pressure bands help you get in those before the move's over, and it'll guide you all the way towards the bottom of the move in most cases, like right here. It started right here with this candle, selling and coming all the way down, and right here is where they stalled. See that? When the what happened? The price pressure bands crossed over. That's right. They opened up here as prices flipped over to the other side of the orange line. Price pressure bands opened, a little pullback, and they shot up again. They crossed back under the orange line. The price pressure bands opened up, and down they go. And even though they whipsawed back up in here, of course, if you were short up in this area, that was a 6-point move. And sure, they whipsawed back up here, but then they came back down. And right here, right on the exact low, they're crossing over. The price pressure bands are crossing up here, telling you that trade's probably over. They go back up over the orange line. Price pressure bands open, telling you to look for support. And look at that. They went all the way, rode them all the way up here till they crossed here. Look at that. It's almost the exact top. They crossed under here, and there's your topping area. A little bit of pullback. Doesn't mean it's necessarily the end of the move, but just time to get out of that trade and wait for the next one. Then they start leaping higher. Usually, a lot of times, these secondary moves are not that good because especially after a big, extensive move, so you have to use them in the right way. But this is the way to do it. So then they flatten out. They cross back up here, showing support. Prices are back over the orange line. The price pressure bands open, pull back, and up they go. And again, right on this candle where they cross back under, they top out and start rolling back lower. And once again, I mean, it took me years of getting the exact configuration I wanted that I could share this with you today and say, these are proven ways of reading the market that are going to really help you in your trading. If I can't say that, I'm not going to offer you anything. So here's the cross under, price is under this orange line, some pullback in here, and look how even coming down here like this. Of course, that was your rent payment there, or mortgage payment on 4 or 5 contracts, right? Facetiously speaking. But notice how even on this little ramp up here, notice how the price pressure bands, I can only tell you that took me years to get them that accurate. They still held under, they still held the cross under. You see that? Even though this little ramp up, and then down they come again, and they flatten out. They stay under this orange line, and now they're back crossing under again. And look at that, taking them all the way down here. Now, a lot of times on an extensive move like this, what will happen is the price pressure bands will cross over in advance, telling you that the move's continuing, but it's starting to soften up a little. And you can always refer to the upper level price pressure bands to give you an idea of where to go. So I don't want this webinar to go too long, but that's using a plain chart there. I'll quickly show you Boomerang and the difference of how that can really assist you with Boomerang trades. Now, you can see with Boomerang, as you know, now I've got the Primo and the Valmo shown on this chart. I'm not going to discuss those right now. We have extensive webinars and discussions that I just wanted to use this Boomerang chart. So don't mind, I'm going to scrunch these up and not to worry. I just want you to focus on the price pressure bands with the Boomerang on here. Boomerang day trader. Okay, here we go. So here's the market opening. You have what? You have a buy channel. You know, Boomerang has buy and sell channels. So here's the candle opening up on the buy channel, crystal clear and shaded in that green color. The price pressure bands open up, right? And following all our rules of Boomerang with the Cobra crossing over the dynamic trend band number 2, and indeed this orange line, this orange filter 2. But look at this. Pullback signal line marked crystal clear for you right as the price pressure bands open up. Tells you exactly where to get in, and the prices shoot up, and that's the way to use the price pressure bands for a Boomerang trade. Let's do another one. Price pressure bands open up. All we're watching is the price pressure bands and the sell channel. Here's a sell channel. The candle closes. Price pressure bands open to the downside, pull back the signal line, and down they go. You see that? Now what do you have here? You have the price pressure bands opening, but if you know the rules of Boomerang, and this is the difference between this chart and say this plain chart, you'll be able to identify that no, the dynamic trend bands have crossed under each other, which is giving kind of a bearish bias. You have a kind of a pop up here with the price pressure bands opening, but no real trade because you're more in a bearish bias. Here's that, what you all know is a classic second level sell here, right? Second level sell, but notice when that candle came down and hit that, they opened up the price pressure bands. So what do? Try to pull back the signal line at 7,007 and knock them down 3 points, but it actually went down 7 points from this crystal clear alarmed entry on Boomerang Day Trader. Wow. And then the price pressure bands close up here, and they're kind of floundering now as things get choppy. Everything's kind of flat, nothing to do here. But look here. Okay, so now the dynamic trend bands cross over on the upside. You get a buy channel opening. The price pressure bands are already opened from this candle. A pullback to the signal line comes in here at 5, and it ramps it straight up to 12 with the price pressure bands open all the way up to here. And right when they close, notice red candles coming in. And then same thing. They open on the downside, pull back the signal line, and they get squashed further. For the normal Boomerang is to take 3 points on the trade. But 3 to 4, 3 to 5, I like to say is good. Depends on your experience. If you're brand new to trading with Boomerang, just trade for 5 points. Just for 3 points. Just scalp out 3 points and build yourself up to doing 2 to 3 to 4 contracts, and you'll find it'll give you a good way to trade that way. What about here? Here's the buy channel opening, right? That's the first thing. You watch the buy channel open and close. You say, okay, where are the price pressure bands? Flat, caution, be careful. This is not a very good setup because the price pressure bands aren't sloping up and really opening up correctly here. But look on this short trade where they revert back to the sell side. Sell channel, price pressure bands opening the downside. See that? Then with the matching dynamic trend bands and the price pressure bands opening, you can see that the stronger move comes in. Same on the other side. Reversal, buy channel opens, candle closes, price pressure bands are open, dynamic trend bands are matching, pull back the signal line, and up they go. It's very simple method and rules, but trading is not simple. Trading is absolutely astonishing. Sometimes it's very simple, and other times, like recently with all this market volatility, it's pretty wild, pretty crazy stuff. So similarly here, sometimes you'll get a pullback, but as long as you got your candle and your price pressure bands open there, 03 came down to 98, 75, 99. So there's a 4-point move there, a small, concise move, but nonetheless a move. And again, here, price pressure bands opening, but market's a little bit flat. One of our rules is don't trade against a flat dynamic trend band when all the candles are kind of hovering around the trend band and everything's flat. Just be a little careful and wait for, that's right, a new press to the upside, pull back to the signal line, dynamic trend band or price pressure bands open, dynamic trend bands matching, and up they go. So it's just an absolutely wonderful confirmation indicator when you're in a boomerang trade to see these price pressure bands opening and grab those trades from there. So with that in mind, I wanted to thank you for watching my short tutorial. Sorry about that. It went just a smidgen longer, but I wanted to show you the price pressure bands on both Boomerang and on a plain chart so you can understand how it works.